back with another video. And in this video, I'm going to be telling you the top 10 cryptocurrencies to invest in this 2021. And on the list, we have Bitcoin, Ethereum, Litecoin, Ripple, Polkadot, Chainlink, USD, Tether, and the like. I'll be starting with Bitcoin. Bitcoin has been around for the longest of any cryptocurrency, and it's easy to see why it is the leader with a price, market capacity, and volume that is much higher than any other investment option. Even with thousands of other cryptocurrencies in the market, Bitcoin still represents 40% of the cryptocurrency market capacity. Many businesses accept Bitcoin as payments or as means of payment, which makes this cryptocurrency a smart investment. Even our Visa transacts with Bitcoin. And recently, I got to find out that the CEO of Tesla, which is Elon Musk, invested in Bitcoin with the sum of $1.5 billion. Plus, large banks are beginning to incorporate Bitcoin transactions into their offerings as well. Every investment has its own risk. So I'll be telling you a few risks about this Bitcoin investment. The risk is that it's a cryptocurrency and it's volatile. So the value tends to fluctuate a lot, and you may see the price go up and down several times in a day. If large fluctuations like this makes you nervous and tensed, you may want to avoid investing in Bitcoin. Otherwise, as long as you keep in mind that Bitcoin is a smart long-term investment, the fluctuation shouldn't be much of a concern to you. And also, another reason is that Bitcoin is quite expensive. I think it's the most expensive cryptocurrency in the world right now. That costs about $50,000 per Bitcoin, and most people cannot afford to buy one of it. Not to talk about much of it. So, if you are an investor that wants to buy a partial amount, this might be a negative for you. Second on our list is Ethereum. Ethereum is quite different from Bitcoin because it is not only a cryptocurrency, but it is also a network that allows developers to create their own cryptocurrency utilizing the Ethereum network. While Ethereum is far behind Bitcoin in value, it is also far ahead of other cryptocurrency. Even though it came out years after some other cryptocurrencies, it has far exceeded its place in the market because of its unique technology. And the risk of investing in Ethereum is that Ethereum utilizes a blockchain technology, and it only has one lane for conducting transactions. And this can lead to transactions taking longer time to process when the network is overloaded. And there was a time that the Ethereum network was hacked in 2016, and about $60 million worth of Ethereum was lost. So, because of this flaw in their security, this loophole, the company has made several attempts to increase their security. But loophole is always a risk with any cryptocurrency investment. So you might want to check more on it and decide if you would still invest in Ethereum. Third on my list is the Binance Coin. Binance Coin is one of the few cryptocurrencies to reach its peak since after 2017. In 2017, there was a bull market that caused the prices of other cryptocurrencies to rise. Unlike other cryptocurrencies, Binance continued a slow but consistent trend upward after 2017. Because of its performance, Binance Coin has proven to be one of the more stable investment options, posing fewer risk. Though, in as much as it poses fewer risk, does not mean it doesn't have any risk at all. One of the risks is Binance Apart from its competitors, it was created by a company instead of a group of tech developers. Although Binance Coin's commitment to maintaining a strong blockchain has won over many skeptics, some investors remain leery of this cryptocurrency and its potential security issues. So you might want to also check on that as well before investing. The fourth on my list is called the USD Tether. And the USD Tether is the most stable of all cryptocurrencies because it is tied to the US dollar. For each unit of Tether, there is $1 in the US Federal Reserve. This makes Tether great for investors who wants to transact with their cryptocurrency. And the little risk that's attached to it is that investors have raised questions over the actual reserve stock, and there are doubts that there is truly a US dollar in the reserve bank for each Tether unit. So if this were ever disproven, this fact that they have every dollar per Tether in the US reserve, if it's ever disproven, the value of Tether could drop or might drop heavily. So it's up to you to decide. And the fifth on my list is called Cardano. The Cardano network has a smaller footprint, which is appealing to investors for several reasons. It takes less energy to complete a transaction with Cardano than with a larger network like Bitcoin. This means transactions are faster and cheaper. It claims to be more adaptable and more secure. Cardano consistently improves its security to stay ahead of hackers, but there's still some risk attached to it. Even with a better network, Cardano may not be able to compete with larger cryptocurrencies. Fewer adopters means fewer developers. This is not appealing to most investors who wants to see high adoption rates. The platform has big plans, but there are doubts about whether it can live up to that potential. Sixth on my list is called the Polkadot. Short form is DOT. And this Polkadot was created by some Ethereum founders who broke away from the Ethereum foundation to create their own cryptocurrency with a better network. Instead of having a single lane to complete transactions, Polkadot has several lanes. And Polkadot was designed to reward investors and to weed out people who are just trading on the stock market to make money fast. Investors who are engaged in the company also help to make decisions on matters like network fees, network upgrade, establishing or removing parachains. Uh, the risk of investing in Polkadot is that Polkadot, the founder, which is Gavin Wood, first introduced the cryptocurrency via a white paper in 2016. At the end of 2020, Polkadot began trading on the stock market. With such a short history, Polkadot doesn't have a track record for comparison, and this makes it a riskier choice for investors and potential investors. As you can see on the screen, this is the Ripple token, and Ripple is the company that unveiled the XRP token, and it's enticing to investors because it sets itself apart from other cryptocurrencies by offering international transactions. With a bank itself, international transactions can take up to like 10 working days, but with Ripple it takes seconds. Plus, the Ripple has contracts with big banks around the world. The more contract it has, the more accessible the Ripple cryptocurrency is to adopters. And it also has few risks, and one of them is Ripple showed promise in 2017 when its value went up by 36,000%. However, when you look at the fact that the percentage represented growing to $2.40 stock value, it's less impressive as you are researching cryptocurrencies. Don't be distracted by high percentages. Get down to the real number and see what the growth really means for yourself. Next on my list is Litecoin. Litecoin was originally established in 2011. Litecoin hit the market at the same time as Bitcoin. However, it did not take off in the same way. Litecoin boasts completing transactions 4 times faster than Bitcoin. But in 2017, it was the first cryptocurrency to complete a Lightning Network transaction. The transfer was completed in less than 1 second. If the company expands its use of Lightning Network 4 times faster, Litecoin value could increase dramatically. But the risk tied to it is that Litecoin and other cryptocurrencies are tied closely to Bitcoin. Their value will generally fluctuate along with Bitcoin. That is, the value will go up and down just as Bitcoin does, although at a lesser rate. If you consider Bitcoin's volatility as negative, Litecoin may not be a good choice for you as well. Next on my list, sorry, is called Chainlink, and Chainlink is a unique cryptocurrency. It has an appealing price, while the shares are affordable to buy. They are also priced high enough to not be considered penny stocks. This is appealing to investors because it has proven it can increase in value, and there's still a lot of room for growth. It is also available for trading on Coinbase, one of the world's largest cryptocurrency apps. Being more accessible also makes Chainlink suitable for investors. The little risk attached to it is that while Chainlink is still above thousands of other cryptocurrencies, it has a lower volume and market capacity than more appealing currencies or cryptocurrencies. That is why Chainlink ranks as low as number 9 on the top 10 of my list. The last on my list is called Stellar, and it was established to serve as a niche need within the world of cryptocurrency. It's essentially the PayPal of cryptocurrency networks, serving as a bridge between banks and blockchain networks. As a decentralized network, Stellar can convert any currency and trade it across channels. It makes these transactions cheaper and faster than they would be with a bank. The risk of investing in Stellar is because Stellar caters to a niche market, it will likely see other companies try to compete against it. If another cryptocurrency network creates a better platform and takes traffic from Stellar, it could affect the company's stock value. And that's basically it. So please subscribe to my channel, click the notification button for more updates, and kindly hit the like button. Thank you very much. Thank you so much for supporting my video. I really appreciate you.